Hey, this is Mac with PriceActionTradingSystem.com, and this is Monday, January the 7th. This will be our chart lesson for today, and we got back, wanted to hit it hard today, start back to our regular year, and we did, but we didn't get a chance to hit it too hard because there just weren't very many entries. There was not very much volume, not very many bars. It just was not a very good trading day, and I wanted to show you. We really had a trend working down, then we had a break of a trend line, and then we started we really kind of just had a little bit of a trading range today, but the bias was downward. I drew this on here just in case you saw this and we're looking at it this way, but I wanted to show you how a lot of times you get the same, you come to the same conclusion, even if you don't get the trend line exactly right. But then there's other times where if you don't get the trend line at least close, you're going to be way off. But if you drew your trend line off these first few swings up here, it still got you into the right place. Notice that we had the break of that trend line, then a move to a new low, and then we reversed. But so if you saw it that way, that's okay. But if you try to drag this down, you can see it just doesn't fit very well. You might make it fit there. So I didn't like it. And generally, you find your swing off the first two, or your trend off the first couple of swings or so of the current day during the overnight. And so even if you would have seen it like that right there, we still had the break right here and then two legs, and they're pretty much two measured legs. This is your break, so there's leg one, and then here's your second leg, and you can see that still got really close. Then we had the little failed break lower and reverse. So you could have gotten it that way. But what I really think happened here is we had this spike down, and then we went into this channel. And the way I found this channel was I drew it off the lows first, and then I just brought it up, and you can see there it is. And that tends to fit really well. That makes sense. We had the break here, then we had the move down to a new low, and then we reversed out of there. So that's what I was looking at. That's what I was watching. I think that got you to where you needed to be, and that's what I traded off of. Excuse me. So, and it set up pretty well. There really wasn't a good place the market opened right in here, but this was a really, even though it's a nice bearish bar, we're down here on these lows. I'd already drawn this trend line. I didn't like that. It's too close to the lows. It just didn't set up very well, and you can see it reversed almost instantly. You just don't want to be going short at the low of the day, and that's what you would have almost been doing right there. Let me just see if that would have even worked. I didn't like the setup. You would have entered at 53 and a quarter. You seen it reversed. It didn't even get 3 ticks before it reversed. You might have thought about going long, but again, not a good idea, simply because this is a downtrend, and you never know if it doesn't go a few more times lower before it bounces. So you just never know. So it's not, you don't want to be counter trend trading because this is all down. Hopefully you can see that's all downhill, and you don't want to be going short here, but at the same time, you don't want to be going long here. And if you did go short here, once you got into this overlap and stuff, smart idea would have been to exit and get out as quick as possible. So you could have got out with a couple of ticks and got out of there. So that would be my recommendation if you did get suckered by that big bearish bar, because it was tempting and I had to fight myself not to take it. But I know better to be going short at the lows of the day. And occasionally what will happen is it'll break below that bar right there, and it'll take off like a rocket, and you'll look back and think, man, I should have taken that. But 9 times out of 10, it's going to do just what it did, and it's going to cost you a losing trade. So better to hang on. And then you might have gotten tempted to go short right here. I don't know if your bar might have closed on the low, then you might have got tricked in there too. But you're having to go short way down here close to what's now a double bottom on my chart. And so it was better to wait and see if you'd get a second entry. And when it finally came, it was way up here. And you could have gone short right there. I started to mark this one in green. But again, it's, you got 3 overlapping bars. One of them's a doji. Just not a good place to be going short. And you see what happened? It broke lower and snapped right back. But then you got a double top, and you got two little, you basically got this double top with two stems up here. It's a second entry short. Here's your first entry, pull back, second entry. So it was really worth taking there. And you probably didn't get out, depending on how this set up. I did go short here, and as long as you kept your stop up here, there was no, there was no concern that you would get stopped out. It did pull back a little bit, so it got a little concerning, and you might have gotten shaken out here on this failed second entry short, but you're probably going to come back and test this low. So what I thought would probably happen was we'd come back up here and test these highs, or maybe even test this one. But it turned down again, and that's a failed second entry long. So you definitely want to go short here because you got a lot of longs trout, people thinking that we're going to make another leg up. So this was the best short of the day right here. Behind this was not a bad entry, but this was a really good entry. And you see how it took off really fast down to a new low, and you were able to get a few points out of the runners. So and you might have even got tricked in right here. And if you did enter here, this is not a bad trade because this is a second entry short, and it's a nice bearish bar. And again, as long as you kept your stop above the signal bar, which is right here, you would have been fine. But notice, again, even though this is a nice bearish bar, there's 1, 2, 3. By the time it sets up, there's 4 overlapping bars. One of them's a doji. You could probably consider all 3 of them a doji. 1, 2, 3, 4. Actually, there's 5 overlapping bars by that time. But this is such a bearish bar on a second entry, it's hard to ignore. So I'll tell you what I did. I went short here, added on here. When I got this set up, I added on again. And I almost let them shake me out here when this turned into a doji. But it fits our rules, and it is a nice bearish bar. But looking back on it, I should have probably waited, and I definitely shouldn't have added on, because when this bounced and got, and is holding right here and starts to climb, it got me really concerned that we might make another leg up and then come down, because we had a gap from the close up here, and that was a little concerning. The market closed here, so you see we did fill that gap before the end of the day right here, and then we started to sell off again. But you never know when you're going to fill that gap first and then head lower, and that could have happened. So I was being a little aggressive with that trade, but that's such a bearish bar, you just can't hardly ignore it. And I left my original stop above this bar right here, because this was my original entry. So even though I didn't get a lot of entries today, I had 1, 2, 3 sets of contracts going, and by the time I got these runners down here, they were pretty good, and definitely any runner survived off this entry or this one if you held on. So that was the trade of the day. There's really no good long until right here when and again, this is a failed second entry short. Notice that we got the trend line break, the move to the new low, and then you've got 2 legs up, and then your first entry short, a little pull back right there. See how this bar's low is higher than that bar low? Make it a little bigger. Again, you got the stem here, and then you got a little higher low. So when it broke low there, that's a second entry short. And I was tempted to go short there, but it's just not a good setup. There's no real bearish bar. There's a lot of overlap. So you're better off to hang on and wait, knowing that we've already had a low. And guess what? When this reversed up here and ended on its almost high, that was a good place to go long. Possibly I did it in green because it's not a great setup. So it was really better to wait on a second entry, and then you had a failed second entry short right there that turned and closed on its high. So that was the better entry. That's a second entry long, and even though you're going long at these highs, you've had your trend line break, a new low, you got a higher low here, a second higher low right here, and a real bullish bar. So that's worth the gamble, thinking that we're going to come back and test these highs, either this high or this high. Plenty of room. And you can see that was another great entry. So between this move and this move, you were able to make some pretty good money today. But if you didn't catch those, there's just not much else there, and you probably got trapped on the wrong side. And you might have even gotten fooled right in here because it took this a little while to work its way down. They were making it look really bullish with the number of contracts that were coming in, the way these bars were doing, but there just wasn't any, they weren't selling it hard yet, and there just wasn't enough buying to take it higher. So they just were loading up here and tricking people. And if you follow the rules, which the rules say you don't, this is a downtrend, regardless of how you drew your original line, it's a downtrend. And until you get a break of that trend line and a retest, you still need to be looking for shorts. The bias is down. You definitely don't want to be going long up in these highs, and that's what they do. They get up here and they keep reversing it and making people think it's going to go higher, and they trap them all in, and then they finally take it down, and all these longs in here have to exit, and that's what suddenly drives it down real hard. And so that's what does that. And so, people always ask me, why it looks so bullish right in here, and then suddenly why does it just reverse and look so bearish when they couldn't get it to go down? And that's what happens. They get all these people thinking long, and they add on here, and then it pulls back, and another group adds on. They think for sure it's going long now, and they just get them all loaded up to the long side, and then suddenly they start taking it lower, and it hits all these long stops, and then also new shorts jump on, and they drive it down. And that was really it for today. And two of these trades were really aggressive trades. So again, this is an aggressive short. This is an aggressive long. The two reds are the good short setups. And just remember, that's the way I do the color coding. Red is a good short. Blue is a good long. And the green ones they meet our rules, but they're not the best setups for whatever reason I discussed in the video. And just, a lot of people have liked the idea of the way I've done some of these trades where I show the trade coming in. And you can see this. It's, here we are, we're bouncing on a new low. And if you see it like that, that looks really bearish. But look where we're at right here and how close we are to these lows. And look at all these stems. And if you drew your line across there, because you could have drawn your line, you might have originally even drawn it across here like so. And you see, and that kind of works as well, but this was my thinking. It was off of that last low, the first couple of bars it touches, and you see how the stem formed right there. That's showing you that generally where those stems will form or where those lines are. And that's why, it'll break below it, but it ends up closing back inside that line. And so as you see that coming down, that's not a good place to, and look, it bounced again there. And these are all dojis, lots of overlap, and you see it, you might have thought about going long there, but then what happens? It snaps right back down. You just don't want to be going long with all that overlap. And you don't want to be going short there because it's so close to the line, it's so close to these other lows, just not a good place. And you see it comes down, it touches that line again, it gets below it right here, and then instantly it bounces. And you might have considered going long right there. That's a pretty good bounce. It's a failed break below these lows. And you can see that one would have worked. And then you get up here, and now you're looking for a short. We're back to the trend line. This is where you want to start looking for your short. But notice this is closing on its high. It's a doji. This is closing there. It's high. It's a doji. You don't want to be going short there. And look what happens when you break above some overlapping bars. It kind of snaps back. It sets up. You might be thinking short here, but, because you don't have a really good setup, you want to see a big stem and a bear. You want to see these reversal type bars, and neither one of those are really reversal bars. This one is close, so you might have thought about going short there. But again, look at all the overlap in the dojis. And look what happens when that one ended as a doji. If you did get sucked in there, that's your clue. Get out as fast as you can with the best you can. And seeing it gave you a chance. It came back down here again. So you could have gotten out with a tick or maybe a break even or something. And you see it broke lower and then turned up. So you could have actually gotten out with a tick there easy. And so when you see those, if you did get sucked in there, when you see this next doji, go ahead and try to get out. Try to get a tick or try to get out at break even and just salvage the trade and look for another entry. And so now you got all this overlap, all these dojis. No reason to be thinking long yet, but no reason to be thinking long. If anything, you might be thinking long if that would have closed on its high. That, with that trap there, you might have considered long there, and it would have worked. You notice it's going up, still going up. Now you got a little bit of a double top. It's too late to go long. So you're still looking for shorts because this is the first real break of the trend line. And then you get a doji, and you might have thought about going short there, but that's not a good setup. You do have a little bit of a trap, and you might have gotten trapped in there. But notice it just goes higher, another doji. Then all of a sudden you get a little break lower, and then it's turning up, and you see that's looking really bullish there. But you don't want to go long at a high like this. You got to wait for a pullback when the trend is actually up. And let me show you this as well. You should have had a little trend line there. Notice how that might have been a little steeper like that right there. This is the first break of the trend line. Now you got to move to a new high. And you see it ticked one tick higher, trapped everybody. So now you got a second entry short when it goes lower right here. So that's worth taking because now you got your little trend line break. You got to move to a new high. You got a double top. You need a retest. So now you could consider entering right there. So I entered one tick below that doji. And when this bar ended, you could have even considered that one. So you could have gone short one tick below that. And you see it's going lower. It's going lower. And now it hits that trend line and it gets a little bit of support there. And notice that if you did enter right below this bar, that's a 4-tick failure. So, but you'll see that a lot. It can't quite get that 5th tick, and then it ticks one tick higher. And then now you got a second entry short, and that looks pretty bearish. So, it's worth entering again right there because if nothing else, you might just get a little leg right here that's similar to this one. But again, notice these lows across here. It's a little bit more risky because you're down here where all these matching lows are, where all these stems are. It's been finding a lot of support there. Even though it's not finding a lot, going higher, it's still finding support there. So that's why I drew that one in green. But look at how bearish that bar. It's really tempting. So you just about got to enter there, and I just added on. And look what happened. It ends the doji. And that's what happens. It bounces right where it's been bouncing before because people know it's bouncing there. They're looking to buy, and then it tries to go higher again. But now look, you've tried to go higher twice. And remember, second entry longs, I guarantee you a lot of people got long right there on that second entry. They thought they were smarter than the market. They thought they had everybody trapped to the short side. They're thinking, I got it. They go long right above that bar, and they're thinking, I got it. I got them. We got them trapped. But remember the bias, and this is the first break of the trend line. And what happens, we usually get a retest of the low. And lo and behold, it takes it a little while. And no reason to be going short yet. Look at all this overlap. You definitely don't want to be going long. And then finally, you get a little more bearish bar. You break lower, and it closes almost on this low. So if you get a break below that one, that's a good sign. And then look at it, boom, it breaks below there, it goes lower. And this is really a breakout pullback short on top of being a failed second entry long and a trap. So another reason to take that trade. And look at it go, it's hitting the stop, so it keeps going, and they keep pounding it on down. And you see it starts to get some, down here where these lows are, it starts to find some more buying. And then it just kind of gets hung up. No reason to go long or short right in that mess. And now you get a real bearish bar. But now look, you hadn't come back to the EMA. You got a double bottom. You've had a break of the trend line. You're close to the lows. That's tempting to go short right there, but that's not a good place. And you see it does go a little lower and then bounces. It snaps back instantly because anytime you get that overlap, you better be careful with it. Don't be entering around it, even if you get a nice bar. And that one was really tempting right there. It came back off the trend line, and you never know if you're going to get another leg, but look at all the overlap. Stay away from entering in that overlap. And you see it never really triggered that trade. It was really tempting, and you might have put an order there, but because it didn't trigger, now you see it's going higher. And then there's your possible long, because now you got 2 legs up, you got 2 legs down, you got a higher low. It's after the trend line break. You got a new low. So you might have considered going long right there, and you can see that. And I drew it in green because it's not a great setup, but it's an aggressive, it's a good place to enter if you like to be aggressive. And you can see it struggled a little bit, and you might have gotten shaken out. You might have thought, hey, let's exit. But then it ticks 1 tick lower and ends in a doji, and it turns right back up. Failed second entry short, a nice place to go long, and boom, look at it go. And that was it for the day. So, but hopefully you've had a nice break. Welcome back if you're just coming back. Hope everybody has a great 2013. My headphones are beeping at me, telling me my microphone and headphones are about to go dead. I got to recharge my battery. So we got this to 20 minutes, even though there weren't many trades. So hopefully that little bit of bar by bar stuff helped a little bit. And I'd like to do that every day, but it really is time consuming, and I just don't have time to do that every day. But I'll try to sneak it in there where I can, because I know it is helpful. But anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.